Hey everyone, welcome back to another trade recap. I think this is going to be a pretty exciting video because there's a lot of winning trades. In fact, I think this month I had like a 50% win rate, which is unheard of. Normally my win rate is like 30 or 40%. But yeah, I had some really good trades, and it's reminded me that the majority of my yearly returns comes from very few trades. You know, I think, 80-20 rule, 80% of my returns comes from 20% of my trades, which has been a good reminder. I've had $10,000 in payouts this month. I've received $300,000 in funding with FTMO and Blue Guardian. I've started $2 million in challenges. I'm not trading my strategy on all of them. I'm trading some of them a little bit differently, which is quite exciting. I've even received 30,000 euros in seed allocation from Darwinex, which will be a really fun video to make. I'll do that next week if I have the time. So yeah, this month I've taken 10 trades, which have 5 of which were winners, 4 were losses, and 1 was break even, and it generated a total return of 13.93%. So let's jump straight into the trades. So the first trades I took this month were on AU. I took these 2 sweeps right here. We had this larger directional bias, this big downtrend, which makes shorts more high probability to play out. And we had this big push down right here. I think I actually took a sweep right there in February, if I remember correctly. It was quite close to hitting my take profit, but it did end up reversing with this news candle right here, which swept this high. It was quite a shallow sweep though, only 2.8 pips, and it was Friday evening, and I didn't really want to hold a trade over the weekend, so I didn't actually take this entry, whereas it might have fit my plan. Shallow sweeps do tend to work out if there's a directional bias, but yeah, right before Friday market close, I wasn't willing to take a trade. So on Monday market open, there's a bit of a better sweep and a stronger shift for the entry candle as well, so I was happy to take that. And then we trickled down throughout Monday, built some momentum towards the end to hit my take profit. And then we sweeped these lows below this push up, this push up, this push up, this push up. So this is quite high probability because we've got a lot of stop orders and stop losses below this major low. Although at this point, if I take this back actually, we were actually starting to see momentum start to build to the downside. So at this point, I was looking for a continuation. I wasn't going to take the entry based off of this simple retrace candle like I normally might, based on the fact that we're actually building momentum to the downside. So I actually waited for a proper shift. I wanted to see a real good shift in momentum candle, which I felt we got at this point, so I was willing to enter there with a 10-3. And there's actually an internal reversal here as well, which is another entry we trade in Zentum, where we have a descending push down and then a shift up. This is very high probability to play out. It's a combo in some ways. It's a mixture of a sweep and an internal reversal. So yeah, I entered at this point and it pretty much reacted straight away. It was very close to hitting my take profit, came back, tap break even, and then went back up and hit my take profit. So yeah, those are the first 2 trades I took this month, immediately starting me off with plus 6%. So the next trade I took in March was on New Zealand US dollar, which is a pair that I used to trade years ago. It's a very corrective pair and sweeps seem to work out really well on it. So I actually took this trade with 0.5% risk, a little bit experimental, and it moved away from my entry straight away. And at this point, I was like, right, I'm not really willing to accept a loss on this pair, which I'm still testing. So I did end up moving my stop loss to break even, which saved me from a loss, I believe, in this case. But you can see the price action is very similar to the AU sweep I just discussed. We have these 2 pushes up, price is very range bound, and I waited for a proper shift candle to play it really safe. But yeah, although it tapped me out, maybe you could use a bigger stop loss. It did go in the desired direction in the end. But yeah, I did take another sweep later in the month on NU. But yeah, it's worth bringing to your attention if you are also backtesting such a liquidity sweep entry, as it may work out really well on your account. So back over to AU again, we had this really nice flag, and I think a few people were deterred from taking this entry based off of this wick. So I understand the general consensus is that if you see a large wick, you want to see a range, but I think it's worth questioning why you want to see a range. The reason you want to see a range is because you want to see no shift in momentum. So if price can show you no shift in momentum in another way, because there's lots of ways that a price can show no shift in momentum, a range isn't the only way to see no shift. You can see no shift when you get a single candle pullback. You can get a shift when you see lots of small candles, like in this case, price pulled back, barely retraced all of these candles. How many hours? 1, 2, 3, 4, 5, 6, 7 hours to barely take out this one. That shows me a sufficient range if you want. But yeah, prior price action was quite good because you could say we are in a larger descending. We had one final liquidity sweep of this low. We had this shift up, no shift, price moving up again. Not really seeing any candles here that tell me price may want to move to the downside. I mean, sure, we're seeing weakness with the wicks, but not really seeing any shifts down. We had an excellent impulse, little wick, but no shift in momentum, and an engulfing entry candle, you know, to top it all off. I probably would have taken it off of any entry candle, but that entry candle really sold it. And yeah, price moved away straight away. We had very little MAE. What was this? 2.6 pips, so hardly pulled back. You know, could have used half the take profit and made double the half a stop loss and made double the take profit. You know, I mean, the really high probability trades barely pull back, and then, you know, used a trailing stop loss, so just trailing below the lows. And then I think this was NFP, I can't quite remember, but yeah, it was running a really nice profit at one point. Actually, what was that? I'm sure you're as interested as I am. So yeah, it was a 10% trade at one point if I closed it right at the perfect point at the end of the NFP candle. But yeah, I just trailed it below this low, and then it took me out for 5.13%. Next trade I took was a continuation on EU. And yeah, this was pretty much textbook. This was an excellent entry. Price action is range bound, which may take away some points, but this price action here is brilliant. I mean, we got this push up, we got this range, and I really like it when price does this. When we're trending, price will often push down really with a lot of volatility and then shift back up, and that is an excellent entry point. I mean, look at the shift back up in this case on a lower time frame. There probably would have been a good entry within here, maybe off of this order block. Worth considering. Anyway, so this price action here alone interests me. And then we broke the high, continued with the second and third candle, single candle pullback with a nice wick on the bottom, and then we got a 2 candle break of the high, and I think price tapped me in with like tiny drawdown. So EU generally has 0 spreads on most, you know, raw spread trading accounts. So in this case, if this was any other pair, it probably wouldn't have actually executed me here. And then came back, so you'd have gotten executed at that point, I suppose. Although I think that might have been during spread hours, yeah. And then we broke the high. I was able to trail my stop loss below this low. So I think this was negative 0.24% reduced risk at this point. So if it takes me out, it's only a 0.24% loss, and that is ultimately what ended up happening. It kind of ascended and then took me out. So yeah, it was a 0.24% loss. But yeah, price action was so good here. I was pretty confident it was going to continue. So next trade of the month was on EJ, and we had a really nice trending price action here as well. So the euro pairs were just trending for whatever reason. I think price action we were kind of coming from a bigger range, descending into ascending, started to build momentum to the upside from this, you could say, ascending. There's favorable wicks everywhere, big shift candles everywhere, so there's obviously buying pressure. We had this shift down, so I was quite interested. At this point, I didn't really expect price to continue, but if it did, I needed to be very cautious of how it broke above this high. So I wasn't looking for any continuations at this point above this shift. It's a bit dangerous. And yeah, we broke above. We saw no shift. We had a few, like another nice candle, no shift, another nice candle. So at this point, the liquidity area above this shift down is irrelevant. We've moved way past it. And then we had this really tight flag, no shift at all. It's pretty much perfect. I mean, to be honest, the only drawdown of this trade is this shift in the pullback, which doesn't really have that much of an impact when we've moved that far away from it. But yeah, using my tiny 10 pip stop loss, we had literally 0 drawdown. I think it was it literally 0? 0.2 pips. So, I mean, with spreads, you would never have been able to get back into that trade if you're a bit late to it, because the spreads on EJ are pretty much never 0.2 pips. And yeah, this was a 5.2% trade, and it went all the way up to 14.6%. So I guess, I mean, you would have been taken out at this point anyway if you're using a trailing stop loss. But yeah, fantastic trade. I mean, it's always the nearly perfect trades that perform like this. You know, if ever you're questioning a trade, you're on the fence, it's an 8 out of 10, 7 out of 10, it's best not to just take it, because these trades, they're no-brainers. You know, you look at it and you're like, yeah, 100%, this is a perfect trade, and I'm going to be taking that. Yeah, and that generated me a payout on my E8 Markets account, so, and my 5%ers account, and passed me a bunch of prop firm challenges as well. So yeah, fantastic. I mean, we had those AU trades to pass me the phase 1 on a bunch of accounts, and then we had this one to pass phase 2 on a bunch of accounts later in the month. Yeah, great trade. Next trade of the month was a flag on EU. We were coming from this larger descending channel, relatively equal lows here, which kind of like a double bottom, you know. We had huge momentum up, no shift, so I actually had my order on, I think at this point, for a continuation. We broke up, and then after we continued with a second candle, I removed my order, and then when we got this pullback, I put my order back again, I think. Obviously this was in the middle of the night, so would that show a shift? I don't know, it's kind of hard to imagine, to be honest. But prior price action was really nice, so I might even be willing to tolerate a shift. Ignore this high trail break here, this dotted line. These candles have equal highs, so the highs and lows are correct, but this high trail break is actually incorrect. We had a bit of a wick and a slowdown, so that's definitely a small warning sign, but the following candles showed no shift, and we had a really strong entry candle. I think the entry candle actually deterred some people, because I think you're kind of led to believe that if it's quite close to the high, it's not so good. But again, you need to think, why is it bad if the entry candle is close to the high? Well, it's because most of the time you can't reduce your risk, but actually in this case you can reduce your risk. If price breaks the high, you'd be able to reduce your risk to like 0.8%, which is what ended up happening. We broke the high, reduced my risk, and then it took me out for a negative 0.82% loss. But yeah, I mean, sure, it saved you a loss in this case, but quite often it doesn't really matter if you can't reduce your risk straight away when it's a really high probability setup like this. I'm expecting it to continue, so whether or not my risk is reduced immediately doesn't really matter if, you know, I get to lock in profit later on. You know, a stronger entry candle, if anything, is a positive sign. And I mean, based off of this price action, I'm expecting price to move down. But yeah, fantastic trade. Perhaps a warning sign with the slowdown, but the following candles showed no shift. As I said earlier, there's other forms to see no shift other than just a range. Yeah, great trade. All right, 3 more trades. So this was a continuation on GU. Maybe a little bit more aggressive. I mean, I think a few people may have stayed out of this one based off of this large V, but after we break the neckline, I'm not really as cautious for a range anymore. So for example, if I saw a continuation at this point, if I saw this price action, I probably wouldn't take that, because at this point is when I'm expecting the range. You don't often get the range up here when price breaks the neckline of the V. I call it the neckline anyway. So yeah, we broke the neckline, single candle pullback with the trend, and then we got a really nice little break there. On GU, that's where I have the biggest tolerance for smaller breaks. AU second. And then I think we got tagged in. Yeah, rejected with a wick. Broke the low, so I was able to reduce my risk above this inside bar right here. And then, was this counter trend move? Yep, so another inside bar, and then another break of the low, which meant I was able to actually lock in some profit. So I locked in 0.16% profit. So after commissions and spreads, this was probably more like a break-even trade. And then I think at this point it was spread hours, yep, and then took me out for a loss. Unfortunately, let's say I hadn't reduced my risk and I was not so crazy with my 10 pip stop loss. Let's say I was using a 15 pip stop loss. This would have actually been a really nice trade, I think. Would we have been able to reduce risk later on? Okay, no, actually. It wouldn't have been a super nice trade because my stop loss would have been right there. But yeah, maybe experimenting with take profits could be something that interests you. I don't know. There's a lot of potential with risk management, because that's really what it's all about. Not really about the entries at all, to be honest. But yeah, there you go. Continuation on GU. Prior price action isn't the best. We had a V, broke the neckline and continued, so at this point I'm just expecting continuation, which is what happened, but unfortunately I got tagged out. So that's just the way it goes. But yeah, another fantastic trade, 0.16% profit. All right, 2 more trades, both sweeps. So this was a sweep on AU, I'm seeing a larger directional bias. So you can see we're in this larger downtrend. We've got a V followed by a range. So there's a second reason I'm expecting price to move down. And we got this push down right here. Initially, we had this shallow sweep, 2.9 pips. I really don't like shallow sweeps. It's something I still need to backtest. But at this point, we had an excellent sweep of the high, and I was willing to enter. And we got a really nice entry candle as well. So price initially moved away. I think, well, I'm not reducing my risk on trades like this. Otherwise, I could have reduced my risk. Yeah, that's the extent that price moved down, and it took me out for a 1% loss. And then it started moving down. How much? Just a little bit. But yeah, that one was a 1% loss. Interestingly, my one of my trading partners, Nico, he actually took a long here. So we were in contradicting positions, interestingly. And this is because he actually started to see an uptrend forming, smaller uptrend here, because we've got higher highs and higher lows. So you can often see this kind of price action. But personally, the V kind of overrided this for me. But yeah, I thought you might like to know that. It's quite interesting. Yeah, and then I took a similar trade over on NU. So relatively similar trade here on NU, but this is actually a trade that I would not take again. Probably the only trade this month I wouldn't take again. And the reason being time pressure. When it's the end of the hour, you've got a few moments to make your decision. I've said this before, if I'm on the fence and I'm unsure and I've got a few seconds left to make a final decision, I am more likely to go for it rather than to sit out, which is something that I'm personally working on. In this case, I was looking at a sweep above this shift down here. In reality, this is actually a minor high. The major highs and lows I would have drawn on here and here. So at this point, I'm expecting price to fail, move higher, and then move down. So once this high has been swept, that is when I'm expecting price to move down. I'm expecting this to kind of get disrespected, and that is ultimately what ended up happening. Again, I'm using 0.5% risk, so not really a concern to me. And price pretty much moved straight up, took out, sweeped this high, which I just mentioned, formed an entry candle. So it's a bit of a deep sweep. I don't know if I'd really take it based off of this this high anyway. But yeah, that's when price moved and would have given you a 3-to-1. But yeah, this is another great trend because we're in another great trade because we're in that larger downtrend. Not really considering this fee. That doesn't really mean anything because we haven't got the range. But yeah, another great trade. But yeah, not one I take again, I don't think. So there you go. Thank you so much for watching to the end of this video. Feel free to reach out, leave a like, comment. I respond to all of my comments. Leave a comment with this emoji to show me that you made it to the end. I don't know how long this video will actually end up being. But yeah, thank you for watching, and I'll see you next week.